What's up, guys? Sean from Rest to Live here. Get a little bit of allergies today, so excuse the voice. So let's talk about Palantir. I'm going to waste absolutely no time today. I want to jump right in. We're seeing news about Palantir hitting $5 a share. We're seeing that the DCF model is very bearish and calling for a lower price. Okay, I get it. Stocks are down. Things are crazy. This is still a pretty successful company with lots of good things going for it. But what you may not know is Palantir has largely been planning for a Black Swan event. I'm going to share a couple articles with you. And I'm also going to share an actionable thing we can do, and then also what I think might be a pathway to think about how this thing gets back to 3 or 4 or 5x where it is today. This is not bullcrap. This is not fluff to get views. This is actually what I believe, and I believe this is not just Palantir. I think we could see this across a lot of companies that are seeing some real tough share pressure today. So without further ado, let's jump right in. And as usual, I'm not a financial advisor. It's not financial advice. This is my opinion and take on the markets and where they are. It's simply for education. And full transparency, I own Palantir, both equities and options. So first things first, we got some news back in and around the August timeframe that because of the large pile of cash that Palantir was sitting on, they actually went out and bought gold bars. Now, the big controversy here was that, wow, gold bars, why the heck was Palantir buying gold bars? That seems like the opposite of what a technology company would do, right? Michael Saylor and others are buying Bitcoin. They're putting Bitcoin in their treasuries. They're going to try to ride that Bitcoin wave, and they're going to try to ride that decorrelation between stock prices and Bitcoin prices. Well, here's the problem. Crypto's really down with equities. So that correlation has broken. It's now correlated very tightly. Doesn't mean it won't change back, but as of the time of making this video, if you're down in crypto, you're also down in equities. That makes for a whole lot of pain. This creates a lot of pressure now on those treasuries and balance sheets, things that no one's talking about, but really should be. This is not silly stuff. This is real stuff. Now, Palantir, on the other hand, basically came out and said, look, we're purchasing about 50 million in gold. Now, granted, 50 million relative is not a lot of money for a company the size of Palantir or any publicly traded company, but the idea there was gold will at least maintain its price, I think is really what they were going for. And again, it's only 50 million, but this is what I want you to start thinking about. They were already thinking Black Swan events going back to August. What if scenarios? I mean, again, we're talking about an AI and machine learning company here. Like, these are good things to hear. So just some interesting notes. We don't know the exact numbers they paid, but I want to share something interesting. So at the time, in and around the date that this was released in August, gold was trading around 1,787 an ounce, give or take. Today, it's about 1,853. So it's close enough that for the sake of argument, I'm going to call it about the same, right? Maybe it's worth slightly more, but it's close enough within a margin of error. We don't know what day they bought on or what time of the day, etc. So in theory, that money is still sitting there, still safe, still preserved from the inflationary perspective, as well as a Black Swan event. And I'm going to start sharing my screen as I talk about this, because I think there's something really interesting that could happen here. And as my screen is coming up and I'm sharing it, I want to call this out. One of the things that I do very differently in the way that I think about my go-to-markets, the way that I think about my research and due diligence, is I'm constantly trying to get away from what everyone else is doing. Palantir is a great example of how you have to get a little bit more creative and look at what other people are doing, how they're investing differently, how their books are reflecting values in ways that other investors are not doing it. If everyone follows the exact same models, then by that theory, prices will never move. They should always be known ahead of time. And as new information changes, the entire market changes with it. Stocks are always decorrelated because they move based on their own individual data. This is the real world. That's not what happens. We're watching as entire markets are getting absolutely decimated and destroyed, maybe for good reason in theory, but you can't tell me that every single company is doing terrible at exactly the same time, right? But this is the way the market moves. And then what happens is we see the major players who have cash on the sidelines jump in, buy stuff at a discount, while retail traders are getting absolutely destroyed, wiped out, house calls, margin calls getting destroyed, losing their life savings and their retirement, while someone else is like, oh, great, more discounts. I guess I'll buy on the way up and crush everyone else. You can do the same, okay? But you have to start looking at things differently. So as I'm watching these articles come out about $5 Palantir and DCF modeling, et cetera, nothing is wrong with what's being said. Let's be clear. Like, a DCF modeling is very accurate. It's a great way of predicting price. But there's other things that can happen that can change that as well. So Palantir has a high market cap. And as I was thinking about this, part of the issue is they do have a lot of shares, okay? And as this price is coming down and it's looking more and more relatively where maybe the valuation should be, in theory, based on what we know for data, I'm starting to think about what can I have from an impact here? How do I want to play this long term? So first and foremost, I pulled up this article because I remembered hearing about the gold buy and I wanted to get some details on it, right? So I've already explained everything that was in here, so I'm not going to reread it or repeat it to you. But essentially, in a nutshell, at this time in August, right, we knew they bought about 50 million in gold because the cash pile was growing. There's a quick view of the price here at the time of this article, right? So I'm not going to read all these things. This isn't what I actually care about. My point simply is that they were already starting to think about the fact that something could be going on. They want to get some diversification on their balance sheets. And this was a way for them that made a lot of sense. Now, along with this, I started thinking about, okay, well, what are we talking about from the perspective of what they actually have for cash flow and or an actual cash balance? What kind of a war chest does Palantir, Alex Karp, and team have to protect themselves if something was to happen? But the key here is, and I'm going to be really frank, I really don't care what they're doing to protect themselves. I'm an investor, and I have every right as an investor to vote my shares. And if they F up, I'm going to go and vote against everything they want, and I'm going to try to rally my teams to do the same, right? But this is a case where now we saw that purchase happen, right? And I just want to call it out again. This was in August. We're now looking at an article from October where the headline, in a great bit of irony to where we are today, was "Too much cash can be a problem. Why Palantir Technologies may want to reinvest more into future growth." So Palantir's sitting on so much cash, including the gold now that they've put on the balance sheet as well, that there's a call to do even more, right? More marketing, more reinvestment into the company. And I, as someone who's been in the space for a long time, I'm looking at this. I'm looking at the contracts. The contracts are over long periods of times. Yes, it's backlog based, and yes, they have to get there to recognize some of the revenue, of course. But then I caught this little piece here. At the time of this listing, Palantir Technologies at last report at this time, which was from June 2021, was that it had zero debt and cash worth 2.3 billion. Now, I see things like this and my antennas are going off because I'm starting to think about what can they do right now, late January, after a big market crash and drop, and watching as their shares have fallen as well. And what I start to think to myself is, excuse me, it was Steve. Excuse me. What I start to think about is, well, I'm not saying they should do this. I'm not saying they have to do this. But using Palantir as an example, this could be a perfect time to start thinking about buying back some shares and just do a general share buyback of some certain dollar amount. It could be anything, 100 million, 200 million, maybe throw $1 billion at it. Now, as a technology company and a growth stock, I'm always very cognizant of the fact that I want them to use that cash to grow the business, to really expand their business. I want them to reinvest in technology, in hiring. I want them to hit marketing hard. But the reality is Palantir is a pretty well-known company. They're extremely strong in the federal and defensive space. They're obviously moving into commercials. I did a really good deep dive, or at least I think it was a really good deep dive a week or two ago, really looking to the numbers, their customers, how they're growing, growth rates, cash rates, margin rates, etc. Looking at this today, my initial reaction is that this could be a huge opportunity for the team over there to think about taking some of the shares off the public markets, put them back in the safe, and lock that door. And we're gonna in theory see less shares, which means if we're assuming the market cap is accurate or even needs to come down a little bit, we still can get some sort of standardization or easing of pricing by your share perspective. Now, if you're saying to yourself like, well, yeah, but that's never going to happen, let me point something else out too. There are a lot of people who are watching videos about Palantir on YouTube. This is a microcosm, but I want to key in on this. If I just think about the amount of people that I personally know who watch my videos, who watch all the other videos about this, it's a lot of people. Yeah, it's retail traders for sure, but there's a lot of interest in and around Palantir, its price, where it's going, the direction of the company, the future of the company. What also starts to get me going is I start thinking about from an institutional investor perspective, what's that look like, right? So I'm going to run a quick search here live. Let me just see, Palantir largest owners. Let's just see if I can pull this up for you here. Perfect. Here we go. So I'm going to share my screen one more time in just a second here. And let me just make sure I'm sharing it before I start talking about it here. So I just did a quick search here for the largest owners of Palantir, okay? We've got Vanguard, BlackRock, right? ARK, of course, State Street Global Advisors, UBS, Nico, Geode, Nico again, a different fund, most likely, Renaissance and Northern Trust. We also see our biggest mutual fund holders as well. No surprises here. Lots of Vanguards, lots of ARKs, Canada Pension Fund. I wasn't expecting that, but that makes a lot of sense, right? Nico's in there again, Fidelity's in there, right? No big surprises here, but the reason I'm calling this out is all of these funds also have expectations of seeing how this is going to go up. What I then start to think about, and let's just see if I can do a quick search here, largest hedge fund holders of Palantir. Okay. This is on December 8th, so, about a month and a half ago. And what do we see here, right? Hedge funds are piling into Palantir Technologies. Again, I'm not going to read the whole article, but I want you to think about the way I'm thinking about this before I make my point. Little by little, I start to build up a plan. And I start to think to myself, why is it that all the major funds own this? Well, of course, because they have to get it into their index funds. They have to get it into their general mutual funds, etc. Because when you have to have a balanced or diversified fund, you have to own pieces of everything. Makes tons of sense, right? So there's always going to be some pressure to keep that balance and making sure they're in there. We know, of course, with Cathie Wood and ARK, she's doing all kinds of stuff. Some people think it's great. Some people think it's terrible. I just think it's more activity in and around the stock. Now, the hedge fund piece is particularly interesting, and I want to tell you why I think this. They are not in the business of getting into equities or publicly traded companies that are going to do poorly, okay? They have to hit certain numbers. And this was not an article about how they're shorting the stock or betting against the stock, right? They're throwing money into Palantir because they see and analyze things that other people may not be seeing, right? This doesn't mean that every hedge fund's full of genius, but the truth is, as much as people like to sort of poo-poo them or talk about how terrible hedge funds are, there are some very brilliant genius level people behind the scenes running their programs, running their analysis, running their HFTs, right? Like they know and analyze data very quickly and understand what's happening there. So I don't think it's unrealistic to see that if this market cap continues to come down, especially if we're talking about getting down to $5 a share, which again, I don't make advice on stocks and I never predict prices. Personally, I can't imagine a scenario where it's at $5 a share. And part of the reason for that is, I'm going to go all in, right? If it starts getting anywhere even near that, because then I think we've got acquisition targets. We've got the chance for some of these funds to start going after board seats, starting to demand change. And I think also this goes back to my original point of like, this could be a great time to think about share buybacks as well. The more of these institutional investors they're piling into Palantir, the more pressure they're going to be pushing onto the board, onto the CEO, Alex Karp, and onto the rest of the team that they expect results and it has to show itself in the equity price. So the easiest way to do this is refocus on those efforts to reinvest in technology. We can think about doing share buybacks. We can look at how we expand into new markets, acquisitions, which is really probably what I'm more thinking anyways, which is the total flip side of what we're talking about. But instead of doing the share buybacks to try to revalue the shares based on the market cap and price, what we can really start to think about is, would it be likely to see Palantir go out and make some acquisitions now? It's a great time for it. I mean, just their market cap alone compared to like C3 is 10 times bigger. That's pretty wild, actually. And so when I stand back and think about it, I see all the panic selling, everyone's freaking out, DCF models have changed, the world is over, get out as fast as you can. This is investing in equities is not a game for the fearful, okay? Buy index funds, get into mutual funds, stick it in your IRA or your 401k. If you're buying individual stocks, you need to do real analysis, real due diligence, have a picture of what has happened historically, very descriptive and diagnostic understanding of what you're looking at. You have to very quickly and easily be able to flip the coin over and understand a predictive model with prescriptive outcomes. Here is what has happened. Here's what is likely to happen. Here's what could change the outcomes based on different scenarios. You can look at it from a risk perspective, margin perspective, a customer attrition perspective, a growth perspective. You can bucket it out into segmentations of where they're segmentations of where they're targeting their businesses and where they're growing in different ways. Break those sectors down and see what kind of growth rates they're seeing, what the directions of those sectors and industries are. Lots of ways to do this. DCFs are great. In fact, DCFs are the standard. I'm not at all crapping on DCFs. But there are things that can happen, right? Black Swan events happen. This is a company that was preparing for a Black Swan event. Companies run out of cash. This is a company with tons of cash in the books. Companies get shorted. This is a company with hedge funds jumping in at scale and a pretty good presence of major fund owners. So, what I would really say is take a step back before you panic and sell for a loss. I'm not saying that you should or shouldn't, right? If you don't have room in your portfolio, you want to get out of it. Listen, there's nothing dumber than holding on to a bad position in hopes that it gets better and watching it get worse, okay? Like, do the right thing for you. If you want to sell, don't wait for it get cheaper to sell. But if you're someone like me and you approach this from the standpoint of, what does the next 20 years of technology look like? Well, it's going to be more automated. It's going to be more intelligent. Excuse me. Sorry for the coughing. It's going to be more intelligent scale. And that scale is going to have to require technology that can scale across the enterprise. So with that, I'm going to end it there. I just want to share another perspective because the fear mongering around, the out of business style numbers, the models have all changed. It's terrible. Business is so bad. A month ago, people were going crazy, right, to buy this thing. The entire market went down. This isn't like, I did a video the other night on Peloton, how 15 minutes before the breaking news that no one knew about came out, people were already shorting and buying puts against Peloton. Come to find out, Peloton's denying that anything has changed with production. So just be aware that like manipulation happens. It sometimes is very obvious. Sometimes it takes a long time and it's a big play. If you know the numbers, you know the plans, you read the company documents, you can do okay. And I want to make a final plea here. If you are a shareholder, you have every right to vote with your shares. If you don't like the direction of the company, vote against what they're deciding. Call the IR representative. Demand that you speak to someone in management because you want answers and you're a shareholder. You have every right to do that, and you should do that. I do it all the time. If I don't know the direction the company's going, I will call and start asking questions, and frankly, I want answers. So, anyways, I'm happy to talk more about that in another video. I'll leave it there. I don't want to talk for too long today. But, this is a good time to think about what else can happen. Because Black Swan events happen, but so do, Golden Goose events. I don't know what else to call them. So with that, thanks so much. Have a good Saturday. Hope all is well and your portfolios are holding up. Talk to you again soon. Bye all.